Okay, what is going on, CYPRX advanced YouTubers? Welcome back to another CYPRX YouTube video page. If you are interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. Very much appreciate the love and the support that everybody's been showing this page. Everybody says they love the technical analysis. People have been following on Twitter, sharing, retweeting things. It's just so inspirational to see people really waking up to proper technical analysis and realizing that this market is just so saturated. On my part, I'm going to attempt to create so much more valuable content for you all, not just with technical analysis, but just teaching you things that I know about the market, maybe even reading some of my black book, journal notes to you all, especially those individuals that are really interested in kind of kicking it up a notch, but really you don't have the capital to join the mentorship. And you're just looking for a proper guide on the internet right now to kind of take it up a notch. And like I said, maybe eventually join in the mentorship, but right now you don't have those funds. I want to give you guys valuable information on this YouTube channel. So if you're one of those individuals, you're back. Please make sure that you're smashing that like button on every single video and make sure that you're subscribed, guys. It's free to do so. It helps boost the YouTube algorithm. We're growing this page. We're almost at 5K. Today in the video breakdown, I know that was a long intro, but I love speaking to you all. Today, we're going to break down some XRP price action, some Ethereum price action. I'm going to show you guys how banks and institutions piggyback off of each other. I'm not going to show you guys, as always, all the methodologies that we teach here at CYPRX, but just show you guys some extreme examples, just picking apart some price action. Everybody talks order blocks. Everybody talks charts. Everybody talks, trend lines, whatever your poison is, okay? But nobody realistically talks about why, what they're doing, how they piggyback off of each other, how banking institutions across the world, whales, the rich, right, the people and the elites, how they help each other out. They push price into discount. They push price into premium for each other. Nobody talks about all of that transition of smart money to, or let's say strong money to weak hands, or weak hands to strong hands, okay, vice versa. As above, so below, okay? So we're going to go over that, but just to show you guys the methodologies that I teach and who's actually moving these markets. If you're not already aware, it's institutional order flow. It's people that have trillions to billions to hundreds of millions of dollars. You as a retail trader, speculator, you're not moving the market, okay? Even with $100 million, you're barely scratching, market movement. Okay, one sector of altcoin markets will get squashed once regulation arrives, according to the top crypto analyst. I don't know who this analyst is, but just to highlight some key vocabulary. A popular crypto analyst says that regulation will deter institutional investors from entering one sector of the altcoin space. I highlighted this for you guys. Institutional investors, proving to you all that institutional traders are sitting on the sidelines with trillions of dollars of capital right now that they're waiting to pump into this market. 5 to 10 years from now, cryptocurrency assets in the future that are priced cheaply right now are going to be insanely expensive for the retail herd. Okay. I've been preaching that to you all. In a new interview, the host of a financial education YouTube channel, Invest Answers, unveils why he is skeptical about investing in privacy coins, which are cryptocurrencies that obscure transaction information, allowing users to maintain anonymity and hide their activities. The reason why I'm showing you this article again is them mentioning institutional order flow in this market, okay? Because what we're going to go over via technical analysis, you need to understand that is who is in control of this market. So whether you want to accept it or not, it's kind of crappy to say the least, but that is who is in control of these markets. We see another article right here from the Daily Huddle mentioning institutional order flow. Institutions take profit after market rally, but Solana, SOL, and Cardano, ADA, remain resilient. Okay. A leading digital asset manager says institutional profit taking led to heavy outflows of crypto investment products, over the last week. I don't know why my brain was trying to siphon produce out of that for some odd reason. Just going to read that to you guys. Okay. But mainly, again, highlighting this key vocabulary phrase right here for you all, that institutions are the ones in control of this market. They take profit, the market drops, the market tanks. What are they doing that for? To give themselves discounted prices. Okay. Why? How do you know that? Go off of past price information, off of history. Markets tank, they must go lower before they go higher. Banking institutions are not going to buy an influx of cryptocurrency at a high premium price. They're going to manipulate price to the downside to then send price higher, and then vice versa, as above, so below. They're going to buy price to push price up into premium for themselves before they do take sell positions. Basing all the ideologies that I teach you on the YouTube channel, as above, so below, and the market must move lower to go higher. Write this down. The market must move lower to go higher, or vice versa. It must move higher to go lower. Okay. Coming over here to the charts, breaking down technical analysis to you guys. If you guys are hip, you guys are open-minded, you are aware to what it is that I'm saying, smash that like button. Make sure that you're subscribed to the YouTube channel. Nobody is going over this stuff on YouTube. Mark my words, I'll be one of the realest on YouTube to start doing this. Why? Because I personally am a profitable trader and I want to see other people shine in this market. Now, I do teach technical analysis. I attempt to be a good mentor. I believe so that I am a good mentor. You know, I've had a couple of successful students. I have students working on their trading careers that are going to be successful very, very soon. I've experienced a lot in this mentorship realm. And one thing, that I've really experienced as a trader is that 90% of people have no idea what they're talking about. So when you can find somebody's YouTube page or Twitter page or whatever the case may be, maybe you stumbled upon this page just somehow by some grace of the universe, okay? And what they're teaching you is working right in front of your eyes. What I suggest you do is you pay attention. You don't have to take everything in that I say, okay? Again, because nothing that I constitute is financial advice, but mark my words, you start to see what it is that I'm seeing. I'm telling you right now, okay? It could potentially definitely benefit you. It's that simple, all right? Internet connection, Wi-Fi, cell phone, accessing trillions of dollars on a day-to-day basis in 15, 20 minutes to an hour. That's all you need. Why would you not be interested? That's all I'm going to say. Drops mic, okay? So showing you guys some of the methodologies that we teach. We understand banks and institutions piggyback off of each other. I have my indicator session split on my chart. That is what this indicator is, okay? It just identifies to me when different trading sessions are. We can see that the green for this example is going to be Tokyo session or Asia session, much preferred. London is going to be blue, okay? We have a blue box identifying London piggybacks and New York, of course, red. Right? Why do I have this set up that way? Everybody wants to know, right? Green, why? Because that means go. That's the start of the daily candlestick open. That's why I've identified this as green on my charts. That lets me know that this is when the daily candlestick open. Green means go. That's when the market opens. Blue, kind of mild in the middle. This is the middle of the trading session or the middle of the trading day. And then red, New York session, is the closing or the end of the trading day where the market is going to make a decision whether to continue its trend or reverse. Remember, New York session is 9 times out of 10 the decision-making trading session where the market is either going to continue its trend or New York session is going to be the reversal of the trend, mainly because New York session following suit into the next Asia session is where the daily candlestick closes for the day if cryptocurrency markets did close, but like on stocks and forex, that is where the daily candlestick closes and the market resets itself and then transitions over into the next trading day, okay, at around 1700 Eastern Standard Time, if I'm not mistaken. All right, I know it's a little bit different all across the world, but okay, just adjust to whatever time frame you're in. But looking at this, proving the methodologies that we see here, Asia's just starting in this area of price action. We can play the what if scenario all day. I randomly just picked this area of price action. I'm going to show you some XRP stuff as well, just to show you all what it is I'm talking about. You can go back a couple of different sessions. You can just start playing around with price action and do this yourself to prove my theories. Okay, this is again just to keep you open-minded about the market and that everything is controlled by the elites. Okay, so we see here. And also controlled by the elites and that they all work together. Don't let them fool you. They might create all of this segregation, right, for the public to see. They might create all of this war and agenda and da-da-da-da. But realistically speaking, all the rich are behind the closed doors and they are in control. They're laughing at the poor, okay, period. There's no borders in lands of the rich, okay? And that's something you'll learn over time. But anyways, Asia session, we see that they bought coming into this trading week or day or whatever the case may be. They purchased from this low. So we take this low, we extend it out with the green box. We'll focus on this again during the next Asia sessions. Okay, so maybe potentially this Asia session, maybe this Asia session, we don't know yet. Right now, let's just pretend we're operating in this space. We see London session purchased from a low. Okay, they purchased price, pushed price over to New York, then New York sold off. But what do we see? Just extending this over, taking this blue box. That's all you have to do to go back test this. Take this area, highlight it, extend it over just some time. Okay, it doesn't matter where. You're just extending it over just to test these theories yourself. All right, New York session, same thing. We'll go ahead. We see New York session purchased from a low here. We can go ahead and collectively say that all the banking institutions this trading day were purchasing. We see Asia session purchased, London session purchased, New York session purchased. Okay, so what was the theme for this trading day or this daily candlestick? Buys, right? So what was the interest of the last trading day? If we're going to be looking to trade over here on the right hand side, what was the interest of the last trading day? Well, we can clearly see that the interest of the institutional order flow was buy scenario. So this is how we can confirm bullish order flow. We see buys during Asia, buys during London, buys during New York. Here are those buys during Asia. Okay, so now we've confirmed bullish order flow just by understanding that the previous market day, the institutions were doing what? they were buying, or stemming price lower to give themselves discount to take buy positions. As you guys can see, New York session played a little trick on people. They weren't going to buy from highs. No. They pushed price action down, manipulated price to give themselves discount, and then they took their buy positions at where Asia session purchased from. And if you look, it's actually significantly enough where the banking institutions, private investors bought from the previous day on New York session. As you guys can see here, New York session, they bought from these lows. Asia session utilized those lows as liquidity, grabbed that liquidity, and then took their buy position. New York, collectively speaking, wasn't even pushing price action down into Asia's discount. They were pushing price action down into their previous day's discount from these lows. As you guys can see how they piggyback off of each other. Okay, moving on. Let's talk about London. We see London bought from the previous day's price action. Look at this. We come over into London. Where did they buy? They bought from a low. How? Why? Look at this. We were operating at a high. Look at the price action. We were operating at a high coming into London session. London session manipulated price to the downside, grabbed liquidity from lows, and took a buy position based off of previous day's discount. Here was those buys previous day, New York, Asia. Here was London's buys. Look at this. Okay, if we extend that out, they took a buy position. Let's go ahead and extend this up. Okay, we'll do from here to here. We'll extend that over. They took a buy position from around, let's just say 35% discount from where they bought from the previous day down here at these lows. Okay, then they transitioned past price action over to New York. But what did they do? They sold so that way New York could respect where London session bought from. Guys, look at this. Look at this accuracy. Okay, look at how the banking institutions work together. This is the area where New York bought from. This is the area where London bought from the previous day. Look what London did so that way New York could capitalize on a buy position and help Asia session out. Look at this. It's so insane when you start to see the market this way. London session took a sell after pushing price up and grabbing liquidity again, confirming the ideology that the market must move higher before it moves lower. Okay, look at the accuracy. Then they passed price action over to New York. What did New York do? New York bought from where they previously bought the day before. If you guys see in this area, okay, they also had some orders in this range. They bought to give themselves a premium price. Look at this. They pushed price up to highs. Price was operating down here. They pushed price up to highs to give themselves sell positions. As you guys can see, the market sold off not once, but twice, confirming the ideology that the market must do what? Let's say it together. It must go higher to move lower. It must go higher to move lower. It must go higher to move lower. I swear this stuff is crazy when you really start to see it for what it is, okay? My brain is insane surrounding this stuff. Now let's fast forward. So now we've gone over this trading day. We've gone over this trading day, all right? We still see that the reoccurring theme is buy positions. We see again, all right? The first day, Asia session bought, London session bought, New York session bought. Moving on to the next day, we see again, because why? This is the daily candlestick reset, okay? We see the theme, the reoccurring theme. Asia session bought, London session bought, so that way they could manipulate price for New York, so that way New York can buy next trading day. So again, we see a reoccurring theme, the market moving lower to go higher or setting up buy scenarios, okay? Moving lower to go higher, moving lower to go higher, okay? Next trading day, what can we see? Same scenario, but looking at the discounted areas, these three boxes are all the areas the previous trading days where the banking institutions bought from. Okay, have we broken any of these ranges? No. So what do we have to assume? That these are discounted areas where the banking institutions, guys, are going to be purchasing from. It is so simple. It is not hard to do. So look at this. New trading day, Asia session, they bought from where? Their previous discount. Here's the green box, okay? So we'll look to the left-hand side. We can see that they bought from this low, they bought from this low, and they bought from this low. So they bought in three areas, from here, here, and here. That was Asia, okay? We also know that I've taught you guys on this YouTube channel that if the banking institutions are filling orders, whether it's to the up or down side, they have to add to their position multiple times. They can't just put one order in to move the market. They have to do it multiple times. That's how much money they have. They can't just do it all at once. So Asia session added to their order once, twice, three times, the market goes. Okay, now let's look at London. What did London session do? Well, would you look at that? This is now the third day in a row. London session took buy positions. Previous 2 days, London session bought. London session bought. Okay, You see a reoccurring theme. Where did they buy from? Look to the left-hand side. They bought from their previous day's lows. Okay? Interesting, again, to say the least, how it's all linking up, right? Let's just go ahead and confirm New York session's doing the same damn thing. They're playing with people, okay? Even though, look at this accuracy. This sell that New York session took was to push price action down into their previous day buys. Look at that. Look at the accuracy. This is where New York session bought from, previous day. Next day, look at where they bought from. Market goes. Now you see a reoccurring theme. Asia buys. London buys. New York session pushes price action down lower, respects London session, buys. This was 3 days worth of price action, proving to you guys that the banking institutions piggyback off of each other. Okay, why am I teaching you this? Is it relevant to place trades? Yes, because if price is bullish, let's say for example operating at a high, okay, and right price starts to retrace, or maybe even just starts to retrace. Let's go back a couple more candlesticks. Let's go back here, okay? Would you buy in this general area? No. Why? Why would you buy in this area? Number one, we're operating towards the end of New York session, okay? We know that Asia session is going to come up somewhere in this vicinity. We know that Asia session's not dumb. They're going to do what? If they're going to buy, they're going to buy from previous areas where they bought from. Well, where are those levels at, guys? If you're looking to trade Asia session, which is going to be over here, where are you going to be looking to buy from logically? Lower price action somewhere here. Find another Asia session, maybe somewhere here, maybe somewhere down here, okay? And you're going to sit on your hands until you see that. It's that simple, right? Play price action out. If you don't get a bullish reaction where price comes, grabs liquidity from lows, starts to create higher highs and higher lows back above these levels, then we're not going to confirm any type of bullish thesis. Why? Because that means that the market is not respecting these levels and is more interested in grabbing lower prices. Okay, when we come into these levels, these previous areas of institutional order flow, we need to see some type of bullish reaction in the form of market rejection, okay, where the market rejects price completely, breaks structure, starts to create higher highs, higher lows, or starts to halt and starts to create accumulation, starts to move sideways, consolidating, grabbing liquidity from lows, grabbing liquidity from highs, building liquidity, blah, 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 and then finally moving lower before moving higher. Okay, that is what you're looking for at these areas. It's so simplistic, and I'm telling you guys, if you understand technical analysis, going into a deep dive, okay, maybe you're using your order block strategy, maybe you're using RSI, trend lines, maybe you're using freaking moving averages. I don't know what people are using now. Maybe pivot points. Who freaking knows? I don't know the kind of crazy indicators, but the way that I teach my students is how to read the market. If I just delete everything, okay, I delete everything. This is how I teach my students how to read the market, with naked charts, with nothing but session indicators on, okay? Now I add other confluences in the CYPRX course material that you guys can have access to with enrollment in the mentorship. That's Fibonacci numbers, things of that nature. That's moving averages that I do potentially use to give myself more confidence in a trade. All of those things, okay, are extras that I give to the students. But realistically speaking, all you need is price action, guys. You need price information. You need to understand that fear and greed is what moves the market, and that what's behind that market movement is institutional order flow and whales, private investors with billions, millions, trillions of dollars. Much more money than you and I. Hope that you guys enjoyed this video breakdown. I'm going to end it there. I'm tired of ranting. I hope that you guys, listen to me. Again, nothing that I constitute is financial advice. I'm not telling you guys to buy or sell. This is Ethereum. I could go over to XRP. I feel like this video is long now, but we could go over to XRP. I think I had a little scenario set up for you guys where just highlighting areas in this price action, same thing. All right, go back test, see how banking institutions piggyback off of each other. We can see here just real quickly, New York session sold, New York session daily candlestick, Asia session bought. Okay, look at this, past price action over to London. London session bought from a discount. Past price action over to New York. Extend New York's day over. Look what New York session did. They bought off of a previous day's buy area. Okay, look at this. Asia session bought from a previous day's buy Asia session area. London session bought from a previous day's London session buy area. Same thing, as above, so below. You can do this in sell scenarios. You can flip your charts upside down, and you can see that the market makers sell at a premium from where they sold from previous days. Okay. These markets are a game. Don't let anybody fool you. Blessings to you guys. I'll see you all in the next video breakdown. I hope everybody has an amazing rest of your week. Don't forget to subscribe to the YouTube channel. Smash that like button. Share these videos to more individuals that are interested in trading. Let's wake the community up. Let's bring realness. Follow me on Twitter. You guys know my Twitter handle, C_Domanicore. Follow me if you guys want. I'll follow you back. Blessings. As always, please be cognizant. Please be aware. Save yourselves. Take it easy, guys. Link is in the description down below for the mentorship.